So the moral of this video right here is I want to tell you guys, this is mainly to talking to newer traders, newer investors, okay? Look at me in the eyes when I tell you this. You guys are not as ready as you think. Nowhere close to as ready as you think. And the reason I'm saying this is because recently I had the opportunity to witness this firsthand with a person relatively close to me, believe it or not, that recently started getting into the investing world, particularly investing in cryptocurrencies. When markets go into these very bullish periods, like when you have stocks that just keep going up or you have cryptocurrencies that are just skyrocketing to all-time highs, it creates an overall sentiment. And especially you get people that have never been involved in trading before that start reaching out to you. They start reaching out to people who are involved in trading and they start asking you questions. Hey, what do you think about Bitcoin? Hey, what do you think about this and that? Really, what results out of that is that they end up actually getting into it and starting investing in it, right? And I've seen a number of these cycles already in my career since I started in 2018, late 2018. I witnessed the stock market hit all-time highs multiple times, and I witnessed Bitcoin also hit all-time highs a couple times and sell off from those highs. And I wasn't investing in Bitcoin or any cryptocurrencies or even in the general markets that much during those times. I was just simply learning how to day trade, learning how to trade. But I was also witnessing, like, when you zoom out and you look at what happened in the bigger picture, you saw that during the time where all the markets were hitting all-time highs, everybody was so euphoric and happy about investing and wanting to get into investing. And then that was the top, basically. Those moments when everybody was getting euphoric about the market pretty much marked the top of the market, and the market started to sell off from there and it went down from there. And I mean, it's a pattern that I've been witnessing over these years. I'm not saying right now that this is the top in Bitcoin. I'm not saying this is the top in XRP. In fact, I have a relatively mixed to slightly bullish outlook when it comes to cryptocurrencies, just because it's relatively new technology and there's some interesting developments in the crypto world. But then again, I'm not the type of guy that's gonna buy and hold these cryptos and just pray and hope that they go to infinity, because I have more tools in my belt at this point that I don't need to rely on a crypto going to infinity, you know? Just a quick segue. I honestly think there's nothing honorable about getting rich off of some coin that goes to 1 million. Like there's nothing special about that. Like if let's say you're broke and then you put like $500 in a crypto meme coin and then it goes to like infinity and you made $1 million overnight. You're still the same person you were the prior day, except you just have $1 million extra. Anyways, I just wanted to say that because some people think that, oh, just because they're gonna have an extra $1 million in their pocket is gonna change them, but it's so false. So basically, I'm going over to my friend's house now. I'm not going to say who it is. Just kidding. I'll say who it is. It's actually my own father. And I'm going over to talk with him now about some of the action that we've been seeing in the crypto markets, because he's been getting involved in some of these crypto coins. And he actually experienced, I would say, his first red day today. His first day in his investing career so far where he lost money. And I think that he lost more than he expected to lose in one day. And the reason why he got into this position, in my opinion, is because he was over levered on some of his positions. For people that don't know what that means, it means he had too much exposure into the market at one time. And he was surprised by how far it could go against him, if it did go against him. What's really unfortunate is that you just have to learn the hard way. People have to learn the hard way in the markets. You can tell people, you can give them 1 million warning signs, but they're not gonna freaking listen to you. I believe it was last Thursday where you had Bitcoin sell off from about 98,000 down to almost 90,000. It dropped 8,000 points, which is like, in perspective terms, I think it's almost like a 10% drop in the span of like a few minutes, right after the futures market closed at 5 p.m. These are the types of moves that investors that are just getting involved with crypto are simply not ready for. You guys are not ready for this. You guys think, oh, XRP is going to infinity, Dogecoin is going to infinity because Elon Musk said so. The bottom line is this: how much are you willing to lose? And whenever you say that to somebody who's still new to trading, they're always going to disregard what you're saying. And this is something I was noticing with my dad, who's been getting into trading recently. And every time I would say something like, you know, you just need to chill, like calm down. You have to consider the downside of your trades too. Before I could even finish my sentence, he'd be cutting me off with something. And that's a pure sign that somebody is just euphoric. They're not even seeing straight anymore. They're only seeing one direction. They have a one-directional view on the world, and they're not seeing what's left, what's right, what's behind them, what could go wrong, or what might go wrong, or what might go right. They may not even be ready for how good the trade might go. So just for the viewers, I want you to give them some context about like your trading decisions and your positions. And obviously
my positions, okay, basically
you don't have to be like full disclosure and tell them everything, but at least tell them like what you did, because I want you to treat this as more of like a learning experience.
Okay.
So you started off by buying the coins, right?
I bought the coins, I kept them, I was making pretty decent money on them. I was having a return of about 35% over the past 2 weeks on all the coins that I purchased. Well, it just today, right after that interview, I found it very strange that in the morning, every single cryptocurrency that I bought into was descending.
Yeah.
And going down very rapidly. And they were all doing the same thing very quickly. And I found that there was a correlation to what we saw on TV last night. Because I believe in my heart that what we saw on TV was a very small portion of what Mr. Garlinghouse actually had to say and offer.
Okay.
Because there were certain questions that aimed at him that were pretty insignificant when it came to the actual XRP ledger, the possible future, how we're going to use XRP. Nothing of that was ever mentioned. You know what was mentioned? How shady cryptocurrency is and how many people have been scammed trading cryptocurrency over the past while. How many people have lost money and how, I would say, unreliable the investments in cryptocurrency are.
Right.
And then they put Bitcoin a little bit, they gave it a little bit of steam. They mentioned Bitcoin and the fact that it surpassed 100,000. But that was about it. There was absolutely no talk about utility coins, no speaking about the future of the financial system, what XRP Ledger does. They omitted it.
Okay. So you think it was a biased interview?
100% biased interview.
Okay.
And censored.
So that's fair to say. I mean, I would make the argument and say that like one interview is not going to reflect the whole sentiment of the crypto market. I mean, you have now with platforms like X, there's a lot more people coming out there and the community out there constantly engaging with each other. So basically, when you got into this XRP or these cryptos that you bought, like, do you think that you had a solid entry and exit plan, or do you think you could have improved upon it?
I could have improved upon it.
You know, definitely that's the right answer, I would say, because I know I already told you a few things.
A lot of stuff crashed. It's not supposed to. Come on. The reason those things crashed...
Okay, I'm going to stop you right there.
Yeah, stop me.
Okay, because you said it's not supposed to.
No, it's not.
I'm going to say it is supposed to.
Yes and no.
They are supposed to crash.
There was an effect because of last night's broadcast.
So this is my perspective now. I'm gonna give you my perspective, and I already told you my perspective on this, but you weren't listening to me very much last couple times we talked because you kept going on and on about the utility of XRP and all this stuff, and I kept telling you, be careful because anything could happen. I wanted to remind you of the fact that anything can happen at any time, and I think that you were strongly underestimating that. Do you think you were underestimating that?
I was waiting it to go up to like 380.
Yeah, you wanted to keep
$4.
pumping, obviously.
Yeah, I was ready. Like,
You're ready
let's
for
go,
it to
let's
keep pumping
go.
now.
But then I saw it. It was like last week it started acting up and going sideways. And I'm like, okay, well, keep your eye on it. And today was the day to really keep your eye on it.
Well, I'm going to explain to you one thing about how trends work, especially. If you're going with a trend, the best way to go with a trend is early in the trend. This is what being early to a trade looks like, in my opinion. It's when you're in a trade before the general public's talking about it. If you're in a trade and every single YouTuber out there and content creators talking about it, you're probably too late.
Yeah, for sure.
You're probably too late. Trading always feels counterintuitive. Always.
Yeah, it's easy to join the bull run. I understand.
There's certain signals that you can look for though. Like I would say, let's say you're bullish on a coin and it only is like the first day or second day that it's been pumping. In my opinion, that's something that's worth with a trend continuation type of idea. Because I've seen this. If you look at when Tesla gapped up 20% about a month ago, it was that exact trade. You had to stay on the calls market and the options market. You basically had to only buy the stock, only go long. Do not short it, stay away from shorting it. Because we just gapped up big, there's traders that are most likely offside and there's gonna be an imbalance in the order flow. right? But if you look 2-3 days after that, after 3 days about that gap up, it was over. It was gone.
Yeah.
The options were going to get destroyed. If you were still long the calls after that day, you were getting destroyed. Those calls were going to zero after that. So you have to be very careful about joining trends late. Okay, I know that's very trading specific. I mean, this is my perspective. I think that you got involved with these markets, but you didn't have a solid enough plan for what you would do if X, Y, Z would occur, and you weren't prepared enough for if X, Y, and Z would occur. Do you think so or not?
I do. I do think so. Like I said, it's 3 weeks I'm, buying crypto and looking into it. So
because the other day when we were talking and I was telling you, what are you going to do if it goes down to $2? Are you going to buy more? You wouldn't even let me finish my sentence. You were cutting me off before I would finish my sentence.
I don't remember that.
Well, it was 2 days ago.
We were having fun though. We were laughing about something.
I wasn't laughing very much.
I was.
You kept cutting me off and I was trying to bring you back to reality. And I mean, guys, the proof is in the pudding. I mean, I've witnessed this phenomenon multiple times in my career, but now I'm literally witnessing it in a person, in a physical human.
Next to you.
Yes.
Yeah.
And it's basically this, which is that markets go through cycles where they go up and they really get really bullish, or when they're getting really bearish or whatever. But what happens with these market cycles is they attract the general public into the markets. Mm-hmm. And when the general public, people who are non-traders, start getting attracted into a market, that's kind of where the market typically becomes more volatile. Mm-hmm. And if you look at, the proof is in the pudding. I mean, look at what Bitcoin did the last 2 weeks. Mm-hmm. You had a crazy move. The first time it traded above 100,000, it rallied to 104,000 and above. And then the next day it had a flash crash down to 90,000.
Right.
And it traded there for probably a millisecond. If I was you, and if I wanted to buy and hold a crypto because I was bullish on it for a reason X, Y, and Z, right? I would be ready to buy it more. That's the bottom line. So let's say, the reason why I say that is because you never know what it's gonna do.
Right.
You never do.
You don't. Mm-hmm.
It might crash 50%. It might rally 50%. It might rally 100%, then crash 80%. You do not know what it's going to do. You can't know. No one can know. You can't argue that you know what it's going to do. Nobody knows except for the people putting in the orders that have the capacity to move that market. Those are the only people that have potential influence over that price. It's neither a good or a bad thing, I would say. You just have to be prepared for it. How I would prepare for it is, let's say I was buying XRP at $2.40 like you, right? Instead of panicking out of the trade just because we have one red day, I would be willing to buy more, which means that I have assets allocated for if we have more drops. So I might have, an extra 10,000, an extra 20,000 ready for if we drop to lower prices. And you have to decide as to how aggressive you want to be. You might add 5,000 worth if it drops to $2 even. You might add another 5,000 if it drops to 175. And I'm giving just arbitrary levels, but there's actual levels, because I have a supply-demand system that I still have yet to show you. Mm-hmm. There's actual levels that give you a higher probability of good entry points.
What about exiting the trade today? I think I did a fine job. I didn't lose that much money. I mean, I lost a few thousand, but it's not the end of the world.
It's not about how much you lost or if you won.
Yeah, it was a smart move to get out of them.
You may look back on your trade and have a regret about it.
No, I don't think so.
And say, I wish I didn't sell because now it's at $4.
I sold because my gut feeling says that it's going to actually go lower than it is today.
Okay, but your dad, do you understand that your gut feeling...
Because I saw the interview. And I saw what the impact it did to me, and I know better not to let it affect me.
Okay, but let me tell you something. Do you understand that you said gut feeling. You understand that your gut feeling is not a trading strategy, number one.
No, it's not.
And number two, your gut feeling is not reliable unless you've been looking at the markets for like 6 years straight, like me.
Well, in this
you don't
case,
have a gut feeling for the markets.
Yeah, well, no.
You don't.
You're missing the point. You're missing the point of getting back to the interview. And if I was a noob and I listened to what I saw, I would have bailed out of my trades this morning. I said, I don't want to invest in no cryptocurrency. I don't want my money to be laundered and fucked around with because there's a bunch of crooks running the show.
Yeah,
I don't want to be part of that. Just to say, That's a lot of people think.
So there's a term in cryptocurrency called FUD. I don't know what it stands for, but it's FUD. And it's whenever people post bearish news about a coin or about a company in the crypto space, okay? That interview, from the way you made it sound, basically just sounds like a bunch of FUD.
It was.
That's all it is. And what it is, it's basically just promoting a bearish outlook on a coin.
It wasn't even that. It wasn't
scaring out weak hands. If you have a general bullish picture or a long-term strategy on a coin or on a market per se, one interview should not affect your positions.
It shouldn't.
It shouldn't at all. At all. You need more data.
But you need to understand how XRP is tied into all the other utility coins that all crashed at the same time this afternoon. You need to see the correlation between XRP, Ripple Labs, Ethereum. I could name them all. But when I saw everything drop at the same time, I was like,
but that's how it works. That's how it works.
Really?
Yeah, when markets crash, they all crash together.
Okay,
they all
how
crash
rare
together.
is that?
No, that's how they work. If you look at every single S&P 500 crash that ever happened, or let's say in the last, 5 years, if you look at the COVID crash, I think there was one in 2019.
Yeah, they did. I know they did.
If you look at the crashes in 2019 and then the COVID crash, everything crashed at the same time. Everything. That's how it works. They all do exactly the same as the S&P 500. When it comes to cryptos, if all the cryptos are crashing, you're going to, when the cryptos start crashing, they all crash together. Some crash more, some crash less. And you can see these differences. For example, XRP only moved from about $240 to $2, whereas Bitcoin moved from 98,000 down to about 94,000. Ethereum moved, I think, a couple $100 down.
No, more than that.
So, and Doge, for example, sold off from the high that it hit on the weekend. We were sitting here on the weekend talking. It was trading at the high about 48 cents. It traded as low as 38 cents. So the volatility levels, they depend on the coin. They're different.
They do.
Anyways, the more I would say, if I had to give you anything you could take out of this, is you have to just be more prepared as to what you're going to do with these coins. You have to work on your stuff, and you can't panic out of your trades. If you're going to commit to a trade, you can't just panic out of it. You need to have a serious game plan.
It wasn't panicking. It was a smart move to get out of those trades today, because today was a special day. And I felt that it just wasn't right. This is not normal for every single utility to be crashing to this extent at this exact time. And there's a correlation to the video on 60 Minutes. It's just simple to see, man. Yeah,
okay, so that, for example, what you just said there, you're painting a narrative.
They painted the narrative. I'm just going into the fact that I don't want to lose too much money, so I bailed out of my trades today because of that.
Okay, so that's a simple thesis you have. I don't want to lose too much money. It was simple.
Trump got into power, and he's pro-crypto. And the fact is, they're going to legalize everything and make it...
but that doesn't mean it's going to go to infinity right away.
No, not right away, but it will eventually.
It's possible it will, but you also have to be ready for extreme pullbacks. If you look at the history of crypto...
And the stock market too.
Since Bitcoin, it has 80% pullbacks. It literally has lost like 80% of its value, like 3 times, and then retraced to all-time highs every single time. And I remember like it was yesterday when Bitcoin was trading at 20,000 after having traded at 70-something thousand.
Yeah.
And I was talking with some people at a bar, and they were telling me how they just liquidated their Bitcoin at like 20,000 or 19,000. But because they had no choice, that's how the markets work. They will go until everybody's out, and then they're going to change direction once it has liquidity to go on the other side. And they're going to keep going in the direction until enough people figure out what it's doing. And it just so happened that nobody cared about Bitcoin at 30,000. Nobody cared about it at 40. Nobody cared about it at 60. Nobody cared about 70, 80, 90, but everybody cares about it at 100,000. Everybody. And it's psychological. It's human nature. Right? You have to get into trends before they're in the mainstream.
I know that.
That's the thing.
I have common sense, and I can tell you that it's not normal for every single coin that's part of a utility to be dropping all at the same time by levels never before seen. Like you're talking about levels like 10% in like a minute.
Yeah.
I was freaking out, man. I was smoked.
Yeah.
And I was like, this is not normal, man. Sell.
Yeah. Well, I'm going to say to you, welcome to crypto, welcome to trading, because if there's any markets that have the potential to drop that amount, it's the crypto markets. Those are the markets that can move that amount because they're not regulated. Anybody can wash trade in a crypto market. I was telling you about that last time. You can have some guy that comes in with 2 accounts, starts bidding it in one account, offering another account. You don't know what he's really doing. He could have the whole amount of the float of what the coin is. He could have the entire float of the coin as an offer. His bid could be a fake bid. So he's offering the coin. He has a bid in. So he wants people to front run his bid and hit his offer. He wants people to take his offer. And then once he gets enough people to take his offer, meaning he sells, he pulls his bid away and the market drops because he was the one holding the market up. This stuff happens every single day in crypto, Dad. They can drop 10% in a microsecond because none of it is regulated. The SEC is not going to check. In futures, for example, in the CME group, there's the CFTC. And then for the US stocks, there's the SEC. These are regulatory bodies that investigate pump and dump schemes. They investigate certain activities like this. Crypto is the complete Wild West.
Right.
Anything goes in the crypto market. All of the sickest motherfuckers that exist in this world are in crypto because they know that they can pull that shit off in the crypto markets. Seriously, you're dealing with like the degens of society when you're trading crypto. I'm not joking. I'm not even exaggerating one bit. So you have to be 100% aware of that. If you're going to be in the crypto market, you have to start thinking like some of these crazy people who do that type of trading.
That's why I got out of my trades today. And I tell you, it was more of a feeling of being logical and just seeing what's happening and acting on it. You know, it's not normal for every single utility to start dropping so considerably fast all at once, all at the same time. It's like somebody dropped a bomb.
Yeah. So what are you going to do going forward?
I'm going to wait until I find the right price to get back into some XRP, some Ethereum, some other altcoins that I had. And I'm just going to wait and see what I think is the right place to enter in.
Yeah.
And I think it's coming up. I think I need to wait a few more days.
Sure. That's a good, I think that's a good play. Take it easy, take it slow, and I'll give you the levels. I'll give you the levels you need.
I want to see those levels.
Okay.
I want to see I also want to learn how to charts, you know, when you draw those lines.
No.
Yeah, I want to learn that.
None of that means anything.
It means something.
No.
Yeah, it means something. It means like what you could anticipate or be in the ballpark of anticipating on the next pump or on the next dip. It's an anticipation. It's a guideline. I need to learn how to make that guideline. You need to teach me that shit.
All you need is the system that I've been working on because that's the only system that I trust. That's the only system that I actually know works.
Okay.
Everything else for me doesn't mean anything because I don't know how those things work. There's a million ways to skin a cat. There's a million ways to make money in the markets, but you need real data to prove that. My camera just stopped. Whatever, we're done.